As we have illustrated on a number of occasions, the best way to explain important concepts is to put them to work. That's precisely what we're going to do here with the order point calculation. Some simple math, but super critical to global supply chains, and in particular, purchasing professionals. We can see in bold that our equation is the order point equals demand during lead time plus safety stock. Let us stop here and reiterate that the order point is not a point in time. It's influenced by cumulative lead time for sure, but the order point is not a point in time, it is a point in quantity. Essentially, order point is an inventory management tool that purchasing professionals can use to determine at what point a replenishment order should be placed on an overseas vendor. Again, order point heavily influenced by cumulative lead time, but it's not a point in time. The order point is expressed in units of a product. It's important to reiterate that here. Quickly summarize, DDLT, that's demand during lead time. Safety stock, we know, is additional inventory that an importer will carry to safeguard against supply chain variances. We talked about this. Variances in forecast, actual demand, lead times, all of that stuff. Let's get right into a real-world example entitled the order point calculation. As an inventory analyst for the country's largest importer of ceiling fans, you have been charged with determining a new order point for one of the company's original models. The product still sells okay, but it has reached a point in its product life cycle where it's time to make some purchasing adjustments. Check out this first paragraph for a second. As an inventory analyst, you are charged with determining a new order point. This illustrates right out of the gate that order point and MinMax that we'll talk about in just a few minutes are indeed inventory management tools. This is a great illustration of how integrating functional areas within an organization, in this case inventory and purchasing, how that integration works to the benefit of the company. Purchasing and inventory management must work very closely together, especially in a model where the importer is bringing in finished goods for omni-channel distribution. Just a quick comment on that point. Based on your initial analysis, you have ascertained that the demand for this product during the period under analysis, what we're looking at, is 500 per week. And we'll assume that it's 500 per week throughout the entire planning horizon. It won't be like that in the real world. This is for ease of calculation. You also know that as an inventory policy, the company keeps 300 units of safety stock on hand. Finally, after checking with the logistics department, another example of integration and collaboration, you have discovered that the cumulative lead time for this product is 6 weeks. Based on this information, what is the order point for this item? In the second paragraph, we're getting all the variables in our equation. We're setting up our calculation. Please proceed to the next slide for the answer, bearing in mind that the order point is the trigger for a replenishment purchase order. That's why we're even talking about this stuff, because although order point is an inventory management exercise, it heavily influences purchasing, i.e., when a replenishment purchase order gets triggered and sent to an international supplier. Here we go. We're just plugging in some numbers here. We have our calculation. Order point equals demand during lead time plus safety stock. In our case, we said this, 500 units per week. The lead time is 6 weeks, and the safety stock inventory policy of the organization is 300 units. We plug in the numbers, we get our order point, expressed in units of the item under analysis. As we can see in green, we take our demand per week, per time bucket, to use the proper terminology, which is 500, times 6 weeks lead time. That's demand during lead time. We take that number and add it to the 300 units we keep in safety stock to get an order point of 3,300 units. That means that when this product depletes down, meaning units are being sold to customers, it depletes down to 3,300 units, we have to place a replenishment order. How much is that replenishment order? It depends on the sales forecast, on actual customer demand, back orders, all the things we talked about. Here, we're talking about timing. This item depletes down to 3,300 units we have to reorder. Why 3,300? Because when we place a purchase order on the supplier, it's going to take 6 weeks to get that merchandise. During those 6 weeks, we're going to be selling merchandise at 500 units per week. We have to account for that while we're waiting to get the replenishment order. We don't want to run out during cumulative lead time. That's what order point allows us to do. And it must be very closely tied with the purchasing function. Great illustrations of integration between inventory management, purchasing, and logistics, which really takes us back to module 1 of the entire training program, an integrated approach to importing. Great example of that here. We're going to move on within the subject of the timing of purchase orders to talk about min-max levels. Different story now, but conceptually very similar to order point. Let's see how. Another method used to synchronize inventory requirements with the issuance of POs is referred to as min-max. Again, this is precisely what we're talking about here. Synchronizing inventory requirements. How much stuff do we need to have to meet customer orders with the issuance of POs? Min-max, second bullet, is a type of order point replenishment system where a predetermined minimum quantity, the min, serves as the order point. Conversely, third bullet, a predetermined maximum quantity, called the max, is the highest quantity that purchasing is allowed to procure up to. With the min, we in purchasing are only allowed to have a product deplete down to a predetermined amount. That's an inventory management decision, by the way, what that min is going to be. And when we replenish, we're only allowed to buy up to a maximum amount. The whole design of min-max is to make sure we never run out because we have a certain min, but that we never buy too much because we have a max as well. A pretty effective tool that really began in a raw materials environment, by the way, and has been extended to finished goods because conceptually it's very powerful and operationally it is equally powerful. The concepts are the same between order point and min-max, but they're not entirely the same because there's a min level and a max level in this particular technique. The design of item-specific min-max levels, because it does have to be by item. Every item has to have a min-max level if we're going to use this technique, is intended to accommodate sales without over-investing in product inventories. Hopefully this sounds very familiar because we've talked about it a lot. Supply chain comes down to balancing supply with demand. That's what min-max on an item-specific level tries to do. Second bullet, the placement of POs on vendors must be timed in such a way that item-specific inventories don't go beyond the min level allowed. That's why there's a min level. We can't go below that ever. As such, min-max systems must indeed pay close attention to the accuracy of an item's cumulative lead time. Why is that? Because if we don't know the cumulative lead time for a product, we're almost guaranteed that at some point we're going to go below that min level. You can't manage the min without knowing cumulative lead time for an item, because cumulative lead time for an item determines when we're going to get that item on a particular purchase order. It is very important to note that POs must be placed well before an item is depleted to its minimum level. This is not a situation where we wait until an item sells down to its min level and then place a purchase order. That makes no sense at all, because that would mean that we're not considering cumulative lead time. Second bullet, given the above, order point logic must be used in a min-max model. Same deal, demand during lead time plus safety stock. As a trade tip, and this makes sense, highly variable cumulative lead time can create artificially high min-max levels that bloat inventories. Translation of that trade tip: if we can't rely on our cumulative lead times, an item that we buy 6 times a year, the first time the cumulative lead time is 120 days, the second time it's 140, the third time it's 110, how can we ever manage the min, and the max for that matter, if the cumulative lead time is unstable? This is another theme that we've talked about a lot. Here it comes to life in a very specific way. Let us illustrate, once again, with a real-world example depleting below the minimum inventory level. A company that imports tools and construction supplies runs a min-max order point system for the ongoing replenishment of finished goods inventory. For some reason, 3 of its best-selling items are constantly running out, thus causing backorder situations with customers. 2 of those customers have gotten tired of experiencing back orders and have stopped doing business with this company. As a consultant, you have been charged with uncovering the root cause of this issue. What approach might you take? Second paragraph. In the end, if stockouts are happening with finished goods, it is possible that replenishment POs on overseas vendors are being issued in too few quantities and/or are placed late. We're not buying enough and we're placing the order late. Probably a bad purchasing policy. We don't know. In this case, we have to look and find out. A good approach is to look at forecasted and actual demand, as we've talked about endlessly, existing min-max levels. What's the min for these three products? What's the max for these three products? Absolutely look at the cumulative lead times for these products and replenishment order quantities. How much are we buying when we place the PO? From there, you should carry out the order point calculation, demand during lead time plus safety stock. Well, what did we find out here? In this case, and based on the above analysis, you will discover that replenishment orders were only being placed when the items in question actually reached their min level. Get all the way down to the min and then place the order. Well, of course we're going to run out because there's cumulative lead time to be dealt with. Of course, due to cumulative lead time concerns, replenishment orders have to be placed on vendors well in advance of hitting the min level. Matching up the min levels with cumulative lead time should alleviate the problem and drive down back orders. To reiterate, in a min-max environment, we have to consider cumulative lead time. We have to consider order point logic, demand during lead time plus safety stock. We can't wait till an item goes down to its min level and then place an order when that particular item has an 8-week cumulative lead time. We will run out of merchandise before we get the stuff, is what we're trying to say. That's the last slide in this section. When we come back, we're going to switch gears once again and talk about global purchasing and the use of key performance indicators, KPIs. See you then.